Good morning, everybody. Hope you're all having a great start to your day so far. Welcome to the Chart Guys Day Trade pregame show. I am Jason. Lori's away today, so if you came for the pretty face and the thumbnail, you have to deal with the pretty voice, and I'm going to spare you the thumbnail. Lori will be back on Friday, so until then, you and I are going to become friends, and we're going to talk about the markets, get ready for the trading day ahead, and what we're going to do that is analyze our major coins, our major indices, and get an idea of what the most likely outcome is for the technical setups that we see. So we're going to get started. We'll look at crypto. We'll look at the four major indices, and if we have time, we'll check out a couple tickers for you guys as well. So without further ado, Ethereum is where we are. Actually, let's start with Bitcoin, because Bitcoin is sort of leading the charge here. Bitcoin is in the middle of attempting a daily oversold bounce. We can see in the bottom of this wick, way down here, our RSI hit a low of just 30, which means at the point at which the price was at the lows of this wick, it was pushing sub 30s and got repainted. Repainting means the calculation finalizes at the close of the candlestick. So we can look here and here, at some point we were below 30. So it kicked off our daily oversold bounce. And that is what we are trying to see in slow motion continuation right now. Remember, all of the rules that we use for the short-term time frames, the 2-minute, the 5-minute, the 15-minute, they all apply to the larger time frames. It's just very painfully slow to watch them play out on the monthly or the weekly, or to a lesser degree, the daily time frame. So that is what we are seeing right now. Now, if we go to the hourly time frame, it makes a little bit more sense here. Here's our big hourly downtrend. We hit a low. We hit near double bottom. So that's only $15 away. That's close enough to call it a double bottom, or yeah. It's pretty close. Maybe not $15, 115, something like that. I'm not going to do the math. I'm not a math guy. But we can see that we have a base of support. Hourly higher low, hourly higher high. Now what we're trying to do is get these hourly higher lows in conjunction with this clear area resistance, get a bull break, and what that is going to do is change our hourly time frame bull trend into a 4-hour higher high situation, which gives us a little bit more amplitude for continuation in our daily time frames bounce. So that is the key level for us to be watching right now. What that would look like would be something like this. Ideally come back up over here, and then we are open to the idea of losing this hourly uptrend to establish a 4-hour higher low. So that looks healthier on the 4-hour time frame. As you can see here, we get our higher high, we come back down, get a higher low, establish a new base of support from which we get to build a set of stairs for the bulls to carry this daily bounce higher. So it is all about working with these time frames in combination with each other, understanding what the most likely outcome is. And for Bitcoin, that is what I would like to see. And if we see that on Bitcoin, that sort of strength is going to carry over to Ethereum, which is in a very similar situation with our hourly area resistance, 3,578.98. It's the level to watch. Hourly higher lows. Same thing, looking for a 4-hour higher high into higher low into daily continuation. Now you notice these two charts look very, very similar to each other, and we're going to see this theme sort of stick with us through the duration of the day. Like yesterday, there were a lot of similar charts. It made for a less than exciting day as an analyst. Not a lot of trades were available. There was a few. Check out Western Digital, Seagate, hard drive technology companies, sort of a laggard play following the semiconductor shortage. Maybe we can take a look at those toward the end. Yes, Stephen, attempting to fill Lori's shoes. She is amazing. My mic sounds low. That'll be your volume, sir. I assure you. It's very loud. Maybe I can move. I can't move closer. I'm only about 6 inches away from this thing. Okay. So yes, the charts look relatively similar. So let's check out what I mean by that by taking a look at the SPX 500. So we'll check out the SPX 500. We'll check out our corollary tickers to that, the ETFs that track these levels. So on the daily time frame, nice solid strength. Yesterday we hit close to an inside bar, and what we end up getting is a clear area resistance from the high of the 14th, the 17th, and so far today we see a cloud of resistance up here. All of these highs in combination give us a nice target to work with. If we go to the hourly time frame, we get that level showing up again. This is what the bulls need to get over top of. So that is the clear target for the bulls right now. And if we can get over top of that, then they're going to be in a good position for continuation. So we want to see this challenged and broken right out of the gate. That is the best case scenario for us, is bull strength, a higher high, and then establish an hourly higher low right at our EMA 26. If we go to our SPY, and a SPY is an ETF that tracks the SPX 500 USD, the same concept. What we're looking for is an inside bar bull break. We want to break 416.39. That is the high of the 17th. If we can do that, then our target for the bulls is simply going to be the high of the previous day, 417.49. Excuse me. So bulls are well positioned. If we go to the hourly time frame, we can see that we're just under that level. We have some pre-market pushes above 417.49. So far, everything looks good for an attempt to break that bull. We would like to open under. We would like to trigger those daily traders to go with the day traders and push that price up to 417.49. So overall, well positioned. If we fail to do that, and we grind against yesterday's high of day without any follow through, we're going to be looking for a slow fade as bulls collect themselves and attempt to try that sort of maneuver again, possibly later this afternoon, possibly tomorrow. But ideally, for the bulls, we want to break 416.39 almost immediately. That'll give us a big bull break. QQQ on the daily time frame didn't get an inside bar. We did see a drop below yesterday's low of day, and we saw a relatively weak follow through. So what that means is if we see a weak follow through and a nice solid bounce, a lack of follow through in one direction is a vote of confidence for the other direction. So what we can do is go back and look at 322.08. Losing my voice. I should have warmed up more. That's the problem. Got to do some fancy vocal exercises. Can't come into this hot out of the gate. I'm going to get up early. Look at that lack of follow through. Little bit of volume, no real price action confirmation, and then we see the bulls pour it on and open high. So what we want to do again is break yesterday's high of day in a pretty spectacular way, and it looks like we're opening well above that right now. 326.37, 326.06. That's a little bit misleading, sir. Ah, I see. Missed that last little candle. So ideally, again, for our QQQ, we're going to open below. We're going to crack that 326.24, and then we'd love to get over top of this 327.07. This little cloud of resistance, it seems to be the only obstacle we have in the short term. And that coincides well with this range of resistance over here. So definitely a good target for the bulls. Ideally, we'd be able to push through both of those things right away. And we'll look for that sort of follow through. Failure to do that again is going to result in the most likely outcome being a slow fade over the course of the day, perhaps another attempt. So for SPY, to get a good solid move going, we need to rely on our underlying sectors. All of these ETFs, XLF, XBI, all of the spiders, there are quite a few of them. Some of them are more important and carry a larger weight in the S&P than the others, but we want these all to work in combination. So if you get into a day where you are having a lot of chop and a lot of back and forth action, and you're getting higher highs without much follow through, take a look at your XLF, your XBI, your XLV, your QQQ, or your XLK, tech sector. See who is trading in tandem, who's opposing each other. If XLF is having a great day and everyone else is having a bad day, SPY is going to have a bad day. Or I should say SPY is going to have a non-constructive day. It's not going to be doing very much of anything. But if all of these are working in tandem, and they're all poised for a nice bull break with a beautiful pattern, we saw something like this yesterday, then we're going to look for continuation. Yesterday, for example, we saw ourselves with a beautiful triple top, hourly higher lows, not dissimilar to what our Ethereum chart is doing on the hourly time frame. Nice bull break, and that resulted in some good moves all around. So XLF wants to break 37.99. That is the target for the bulls. Bulls positioned well so far. XBI wants to break 127.50. Or I should say 127.89. We're open just below that with an inside bar there. XLF, did we get an inside bar? No, we did not. Too strong. And then XLV, similar situation. Almost an inside bar, just barely. So near double top of resistance. You get the idea, right? We're trying to break these levels as close as possible, get over top of the clear areas of resistance that we see pretty much across the board today. So bulls are well positioned in crypto. They're well positioned in our ETFs. They're well positioned in our indices. We just need these clear levels. So we did miss the Dow. Forgot to do that one. Also doing pretty good here. We're looking for our target. We're a little bit further away from it. 34,000? Yeah, 34,454.05. That is the key level to get to. And IWM, stronger than everybody so far. Higher, opening higher than yesterday. And at 221.54, our only real resistance is our EMA 12 on the daily time frame so far. So there's our cloud of resistance, correlates well with this action. If you find areas of resistance and you can look back and you can see that they have been previous areas of contention, then the more time we spend in this area, the more shares exchanged, the more likely this becomes a cloud of resistance or support. So imagine this cloud carrying over, encompassing all of this price action. It's a nice visual way to represent. And remember that we are likely to run into issues. Get out of here, magnet. We're likely to run into issues here again, and this can act as support and resistance in the future. So seeing this drop here, we have a more likely than not to hold the area of support because we have spent so much time in this particular area. Overall, IWM, the strongest of the bunch, strongest indices so far. And I think that's more or less it for our pregame setup, what we're watching for. XLV, yes, 123.86. Broke that yesterday, so our major resistance is 123.88, 2 cents difference. Not too bad. Okay. So that's your 10-minute wrap-up, rapid fire. I think it's a habit we developed over the course of many, many years in the Chart Guys. We do streams like this every morning, right? We do our morning show before the market and for the first hour of open, and we cover tickers and answer questions. But in order to be successful with trading, and that's the whole point of the pregame show, is we spend a lot of time understanding the environment in which we're in. I imagine the markets as a river. I want to know which way the river is flowing, so that way I know where to cast. I know what the likely outcome is if I catch something, if I see a beautiful setup. Is the river working against me? Am I swimming upstream or am I swimming downstream? And I want to know what the most likely outcome is overall so that it can guide me with my trade decisions day to day. So this is why the pregame show is important and critical for us. And that is why we watch the longer term timeframes when we're also doing swing trades. All of these concepts work together. So we have our morning show, we have a midday show where we check in and take requests. And why don't we do that right now? We got 6 or 7 minutes left. I'm going to take some requests. I believe I saw someone request Peloton. Oh, yes. Andre, would love to hear your thoughts on the Peloton chart. All right. Let's do it. Okay. PTON. Look at that beautiful bounce. All right, so Peloton obviously has done a very good job recovering from its scary sell-off situation. So if you capitalized on that fear and that unbridled panic, then you did well. So that is something that we really struggle to remember as traders, how terrifying it feels to be in a position that dumps red. And you have to remember, if you're looking at something and saying, wow, everyone is selling, everyone is freaking out, this looks absolutely tragic, those are often your buying opportunities. So we did have a daily oversold condition, and we're seeing some beautiful follow through for it. So what matters right now is this post event. So what we have to do is focus on the price action in here. We can look to this as former areas of resistance for us to worry about when we get up there. But right now, all I'm focusing on is going to be the high that occurred prior to the drop on that day. So 98.81 is our resistance. And then we're going to focus on the short-term action in here, because what we have is an independent trend following this price discovery. So what we have to do is determine what the dominant time frame is on this chart, and it looks to be the 4-hour time frame. And I can see that because we have our hourly higher lows, we lose our hourly higher lows, and then we see some good follow through. So we're trying to establish a trend. We go to our 4-hour time frame and say, look, I want to discover what the trend is. Can you help me out? I always like to draw things. I'm a completely visual trader, so it gives me something to work with. And then I'll drag this guy down and say, look, this is my trend. I'm grabbing it and plotting a parallel line to the bottom of my red candlestick. And I go to look for corollaries. Is there anything here that confirms this, or is it just me picking one level that may not necessarily be true? I see a touch here, over here to a degree, and here. So I'm more confident in this being my overall trend. So what I can do with this information is I can go and look at this and say, all right, we got ourselves an hourly bounce. We have a target for hourly higher low. We have a price action level against which we can stop out against. And what I'm going to do is say, look, overall, we're in an hourly uptrend. we have just hit our support. So our short-term momentum is pushing us to the upside. If I can correlate a nice entry with the overall market, which is poised for a break over yesterday's high of day, if I get those, then my trade setups for Peloton have the overall river flowing in my direction. We have a support confirmation test, so we're still in our trend, which is a upside flow as well. And I'm going to look for short-term entry opportunities on the 5-minute time frame. So for that, what I would look for, well, it could really go either way, right? What we could look for would be a quick 5-minute oversold. If we're looking for some profit taking, a quick flush, or a more constructive longer-term pattern. Overall, what we're looking for is a reason to go bullish. Out of the gate, it's just a lottery ticket. You don't know what's going to happen until that volatility settles down. You have a level that you can stop out against. And even if it's just 15 minutes, a 5-minute time frame, and then a higher high, at least you have that low of day that you can utilize. So Peloton, short-term momentum is to the upside. And the most conservative play would be for a confirmation of our support test again. Wow. And then look for upside continuation there. This is the sort of thing that we, in Chart Guys, when someone asks about Peloton, we will create a thread and we'll just monitor it. So I would leave this open for the duration of most of the day just to track it and see if I'm right. Because I like to be right about things. Money comes later. Your analysis and your technique and your ability to interpret and speculate about what the most likely outcome is. And that's what we're doing with technical analysis. There's no crystal balls involved. There are no hard facts. It's just what is the most likely outcome given everything that I know right now. It's like counting cards in blackjack. If you know what cards are in the deck, you know what the most likely outcome is going to be. If you've knocked out, all of your, all your threes, I don't know how to count cards. You're just not going to get a 3. All right. Well, let's see. We got time for one more. Hopefully that helps with your Peloton setup, Andrew. Chip shortage. Do you think companies will be profiting more since everything's being sold off? Let me read that again. We are in a chip shortage. Do you think tech companies will be profiting more since everything being sold off instantly or less because there's less to sell? In general, the prices that you see are forecasting prices. The market is anticipating what is likely to happen. So, for example, if we can go and look at STX. So there's a semiconductor shortage. So companies like NVIDIA, there's 2 ways to look at it. NVIDIA makes GPUs for mining, and they had a big run up. Well, they've had a big run up because of the crypto surge. So they anticipated that there would be a higher demand for GPUs, and they're not wrong, but NVIDIA has a capacity limit for creating these GPUs. And we are pricing in now the fact that they're anticipated to have a lot of profit. Profit's going to be limited by their ability to create the product. So when we look at that in another way, what I'm trying to say is that gets priced into it. So if NVIDIA comes out and says, yes, we had record earnings, our semiconductor sales are through the roof, and the market believes that a fair value for that news is already in the 600s, then the price isn't really going to move too much. If they astound everybody and make earnings are weird. They can make 4 times revenue, the projected revenue, and still go down. It's all about guidance. It's all about earnings per share, debts, lots of complicated things. I don't play earnings at all, but it's likely that the market has already priced in that sort of anticipated profit, if there is any. Where you get interesting is where you can look into laggards. So there's a semiconductor shortage. Now there is fear of a hard drive shortage. And there are 3 major players in the hard drive space. There's Western Digital, Seagate, and Toshiba. So if we go and look at Western Digital Corporation, their earnings, or I should say over the last few months, they've also seen a surge. And especially in the last few days, we have seen a big uptick because of the fear of the hard drive shortage spreading. So there's a laggard play developing here. STX is Seagate Technology, similar setup. Fear based on hard drive shortages. I'm not even sure if Toshiba has a ticker in the American markets. No, it doesn't, but I wonder if we can see a similar response here. Not quite yet. You get the idea, okay? So overall, anticipated shortages or windfalls based on market conditions sort of get baked into the candlestick. And it's the deviations from what's expected that really move some markets. So that is why we look to our longer term support and resistance levels. And we know that, say, if we get a big breakout on STX, what is our most likely scenario? Do we have blue skies? Oh, good job. Look at that. Well, oversold on the weekly time frame. This is something I would be interested in once we get a daily high or low. I don't want to buy up at the high. That's too much FOMO for me, but I do want to get a higher low or some healthy consolidation. What we could look for would be like a daily full flag pattern, something to give us something to stop out against. If I bought here, right here on the daily time frame, there's nothing to stop the price from falling all the way back to 84.17. And if we get to 84.87 and then we see bounce, that's still a daily higher low. So we want to allow the market to come back a little bit, move up a little bit, and then we have a new place so we can stop out against or protect our income and our capital. Got a little sidetracked there. That's okay. I think that's us. That is it for today for us. I got to get ready for the Chart Guys show. The community show starts in 10 minutes, and we get into a lot more detail about all of this. So if you're interested in what you're seeing, check out chartguys.com. If you have general questions, feel free to post a comment after the stream ends on the video itself, and I'll do my best to answer those for you. We will be back tomorrow. So thanks for watching. Appreciate it. And we'll see you then.